Very good morning, soldiers. So we are in the chapter liquidation of companies. This is the last session from my side and last session for liquidation of companies as well. So in the last class, just I discussed section 326, which is related to overriding preferential payments. So if you check the name itself, it will clearly tells to us those payments which are covered under section 326 overrides the preferential creditors as well. Simply speaking, section 326 supersedes section 327. That means payment of taxes within 12 months, employee salary out of 12 months, 4 months salary, and holiday remuneration, death or disability compensation, investigation expenses, PF or gratuity, ESI amounts. Such all stuff we covered under the preferential creditors, if you really remember the content. But the organization, there are certain payments which should need to be payable in superior to all other payments. Such payments we can call it as overriding preferential payments. So there is a one provision in the Companies Act 2013. Always we should need to make payment to workman within 30 days of realization of any specific asset. If at all workman compensation is pending in that particular company. So amount payable to workman is not the overriding preferential payment. That is the general provision. So based on that fact, just I try to explain the overriding preferential payment concept yesterday. So if a particular asset realization, let us assume 1 lakh, this is realization from an asset. You can consider it as ANSP, let us assume ASP, asset specifically pledged. So this asset was offered as a security for availing the bank loan, which is also for 1 lakh. So then workman compensation liability is there for 3 lakhs. Then as per this provision, whenever we are realized any specific asset, the asset should need to be distributed among workman as well as bank loan party also. Here bank loan is fully secured, which is secured creditors with fixed charge. I agree. But still, due to the general provision in the Companies Act 2013, we should need to distribute in proportion of their outstanding liabilities among the workman people and the banker. So if that is the case, here 1 lakh multiplied with 3 by 4. Here 1 lakh multiplied with 1 by 4 will get by workman and the banker. That is here 75,000, here 25,000. Still balance of workman due how much? 2.25 lakhs here, here 0.75 lakh here. That is 75,000, 2 lakh 25,000. Now the concept of overriding preferential payment will be arise. After making this settlement, still how much balance should need to be payable to the workman? This 2.25 lakhs, right? This 2.25 lakh is overriding preferential payment. And how much amount sacrificed by the banker due to pari passu payment making along with the workman compensation? Okay. If workman compensation liability will not be exist, then banker will get 100%. But right now, still the due is there to the extent of 75,000. That means amount sacrificed by the banker was 75,000. This 75,000 we can treat it as overriding preferential payment. So the total overriding preferential payment here is 2.25 plus 0.75, which is 3 lakhs. So the same content yesterday I read through my PDF. Balance of workman due and unrealized amount of security creditors with fixed charge due to pari passu with workman, we should need to treat it as overriding preferential payment. With this background, let us check one problem which was left over in sequence in yesterday. So that is problem number 4. No, not problem number 4, sorry, problem number 2. Problem number 2. All of you please come to problem number 2, which is based on 326. Amounts payable in winding up of a company are as follows. Secured creditors. So in fact, whenever it is not specifically given, You can always simply assume that security creditors with fixed charge. Workman due is 2,50,000. Show the payments made and treatment of balance in the following two instances. The security realized is 2 lakhs. This is one instance. And another instance, if the security realized is 1 lakh. So let's do this separately per one by one instance. Or number 2. So what is the first instance? Security realized is 2 lakhs. That is simply asset realized is for 2 lakhs. And workman due is 2.5 lakh. And secured creditors is 1,25,000. That is secured creditor with fixed charge is 1,25,000. Now, first, is this 2 lakh entirely covered for secured creditors with fixed charge if workman due is not exist? Yes, it is absolutely covered. Okay. Due to the general provision in the Companies Act 2013, now this realization will be shared by both these two parties. That is, for workman due, how much amount he will share? That is 2 lakhs into 2.5 lakhs divided by 2.5 plus 1.25. 3.75 lakhs. Security creditors with fixed charge, 2 lakhs multiplied with 1.25 lakh divided by 3.75 lakh. Here, I got 1,33,333 distribution. Here, 66,667. This is about distribution among workmen as well as secured creditors in proportion to their outstanding balances. Now here how much, guys? 2,50,000 minus 1,33,333. Balance is 1,16,667. So here 125 minus 66,667. Here it is 58,333. Now the balance of workman due is overriding preferential payments. Out of this 1,25,000, how much amount sacrificed by secured creditors with fixed charge, which is 58,333, which is also a overriding preferential payments. So if you club both the things, you will get the total overriding preferential payments, which is 175. It's fine. This is the first instance. And if you come across the second instance, the security realization is 1 lakh. This is a little bit important. Concentrate. You can see the magic here. Asset realization is 1 lakh. Right? So same, there is no change in workman due. That is 2,50,000. And the secured creditors is 1,25,000. There is no change for this. First, you should need to check one thing. If the asset realized, then the proceeds from realization of that specific asset, is it sufficient to discharge the entire secured creditors with fixed charge? That is my first point. No, just you can ignore about the workman due. Now the proceeds from realization of assets is not sufficient to discharge the secured creditor entirely itself, because secured creditors with fixed charge is 1.25 lakh, but this is only 1 lakh. That means straight away out of this 1,25,000, 25,000 is unsecured. Do you remember my content at the inception itself? I told you how we should need to check the secured portion and unsecured portion. The market value is 1 lakh, but the secured creditors with fixed charge is 1.25 lakh, means out of that 1.25 lakh, 1 lakh is only secured creditors with fixed charge. Remaining 25,000 straight away unsecured. So please bear the point in your mind. So before proceeding with the problem. Now, sir, how I should need to distribute this 1 lakh? 1 lakh multiply with 2.5 lakh divided by 2.5 plus 1.25. How much total? 2.5 total amount. Total amount you can consider 2.5 plus 1.25, which is 3.75. Here 1 lakh multiply with 1.25 divided by 3.75. It is 1 lakh into 2.5 by 3.75. So which is 66,667 here. So here 33,333. So 183,333 here. There 1,25,000 minus 91,667. Okay. Now we already recognized that out of 1,25,000, 25,000 is unsecured, means out of this 91,667 is also 25,000 is unsecured. Simply don't consider entire 91,667 as overriding preferential. After set aside 25,000 as unsecured, the remaining balance is how much? The remaining balance is 91,667 minus 25,000. That will be 66,667 only the overriding preferential payments. This total is overriding preferential payments. So how it is possible? I'll explain. Out of this 1,25,000, I already set aside 25,000 as unsecured creditors. The remaining 1 lakh is there. Out of 1 lakh, just now I distributed 33,333, right? So really how much amount sacrificed due to making pari passu payment to the workman due out of the 1 lakh? 66,667 only the real sacrifice. That part only I should need to treat it as a overriding preferential payment. Anyway, for this 25,000, the asset realization will not cover the whole portion. That's why we are treating it as unsecured creditor. Hope this is clear to all. Anyone having any doubt in this? Understand? Sir, what if the liability is not secured full, sir? I told you, if the liability is not secured full, then the remaining portion will be unsecured. Okay. Fine. So let me continue my discussion. This is all about section 326 overriding preferential payments. And earlier we seen section 327 preferential creditors as well. So guys, we done the various problems like based on overriding preferential payments, preferential creditors, liquidator remuneration, distribution of cash among the various class of equity shareholders at the time of closure of the company. So, but our main agenda itself is preparation of liquidator final statement at the time of liquidation, right? So let's consider two problems for the discussion. I am able to take n number of problems, but what are the problems I can consider? I'll try to tell you the whole content, what we discussed at the time of discussing the theoretical issues. Okay, fine. All of you, please come to problem number 8 quickly, which is based on liquidator final statement. Omega Limited resolved on 31st March 2011 that the company be wound up voluntarily, which is a voluntary. Sir, if at all, if the company is going to wind up voluntarily, Companies Act 2013 will not be applicable now. So I already informed you, we are doing this entire chapter is based on the Companies Act 2013 only, even though the legal formalities are going to occur as per insolvency and bankruptcy code. Because In case of the voluntary liquidation, also what the liquidation professional or the insolvency professional should need to submit a liquidator final statement only. The same thing we are going to prepare. Do you understand? The legal formalities may change, but the procedural issues will be same. That's the reason we are doing these problems. So the following was the trial balance extracted from its books as on that particular date. So property, plant and equipment is given, inventory, bad debt, cash in hand, P&L account debit balance, that is loss, 6% is preference shares, 100 rupees face value, equity shares, 100 rupees face value, equity share, 100 rupees face value, 75 paid up, loan from bank on security of the stock. On security of the stock means which is security creditors with fixed charge. Then stock will be asset specifically pledged. Trade payables also given. The assets realized the following amounts. After all costs of realization and liquidator's commission amounting to 5,000 paid out of cash in hand. So the liquidator commission itself is directly given under lump sum method, no need to calculate separately. Okay, this is liquidator remuneration. Next, further details. The other assets are realized. These are the actual realizations. PPE realization given, inventory given, trade receivables given. If you observe here, secured creditor with fixed charge to the extent of 1 lakh is there. That is simply bank loan. So we offered inventory as a security. Inventory realized at 1,10,000. If inventory is realized at 1,10,000, first you should need to make payment to bank loan 1 lakh. Still we are having a surplus of 10,000. Such surplus of 10,000 you can utilize for making other payments that will be lying with the liquidator. Calls on partly paid up shares were made, but the amounts due on 200 shares were found to be irrecoverable. If you check here, 2,000 equity shares of 100 is 75 paid up, partly paid up equity shares are there to the extent of 2,000. But out of which only 1,800 equity shares only paid up. Remaining 200 equity shares are not paid up at the time of making the final call by the liquidator. Okay. You are required to prepare liquidator's final statement of account. You should need to prepare liquidator's final statement. That is the question. As I already informed you, the format of liquidator final statement resembles the receipts and payments account. So let me give the problem number. So liquidator final statement of account as at 31st March 2011. So the date itself is given at as at 31st March 2011. So now left hand side, you know, which is receipts, amount rupees, which is payments and amount rupees. Now here, so first let me start with the ANSP, that is assets not specifically pledged. Those assets which are not offered as a security, except inventory remaining are free from the security. That is PPE realized value given, right? How much? 168. Can consider the same PPE 1,68,000 directly. Okay. Don't consider inventory here. Book debts 2,40,000 book value. But here the realizable value is different. You should need to consider the actual realized value, that is trade receivables 2,30,000. Okay. Then cash in hand 40,000. Okay. Is there any other asset available apart from this? I think so. Nothing is there. So after that, share capitals and liabilities will start. Okay. Then you can come with ASP, asset specifically pledged, which is inventory. So inventory, how much value we realized? 1,10,000. Out of which security creditors with fixed charge, that is simply bank loan 1 lakh is there, right? First, you should need to pay that. Less bank loan, which is secured creditor with fixed charge. So surplus, how much? That excess cash will be available with the liquidator to distribute among the other parties. So you can give out 10,000. Then in the order, at the time of making payment to the liability holders, liquidator definitely will follow the order. First, legal charges, nothing are available. Then liquidator remuneration only. Liquidator remuneration. So liquidator remuneration means 5,000. So lump sum amount itself was given. So which you can consider as 5,000 as a liquidator remuneration. Then after that, liquidation expenses. So any of the liquidation expenses given. So nothing specifically given. Then secured creditor with fixed charge was already paid. After that, they should need to make payment for preferential creditors. So taxes, employee salaries, something like that. Anything is there? So nothing is there. Right, check here. Only trade payable is there. Equity and preference share capital is there. Nothing more, right? So that's why there is no preference. And the secured creditors with floating charge, debentures also not available. Then you can directly go with unsecured creditors, which is trade payable. So nothing is given means the book value is the payment value. So trade payable 3,50,000. Okay, first what you will check now? Cash available with the liquidator, you can check at this stage. PP 168 plus trade receivable realization 230 plus 40,000 cash in hand plus net realization from the inventory after settling the bank loan was 10,000. 4,48,000 minus 5,000 liquidator remuneration minus 3,50,000 trade payable. Cash available with liquidator before making payment to preference shareholders is equal to 93,000. This is the amount I have right now on my hand. Now, how much amount you should need to make payment to the preference shareholders? 1 lakh. But the cash availability is 93,000. Is it cash is sufficient to repay amount to the preference shareholders? No. Then at that point of time, which choice you have? Liquidator have the choice to ask the partly paid up equity shareholders. 10. How much I should need to ask? There are two methods. There are two methods I suggested. But whenever we are doing the liquidator final statement, I suggested to follow the method number 2, right? Method number 2 means I'll make a notional call. Sorry, method number 1. I told you to suggest the follow the method number 1 because in method number 1, just I told the notional call method. Let us assume I made a call for the entire equity shareholders. Then in the problem, it is clearly given that 200 equity shares are found to be recoverable. When I'm making a notional call from 1,800 equity shares, I can able to recover that call money. So that's why you can give notional call from 1,800 equity shares at the rate of how much, guys? 25 rupees, which is not a real call, just a notional call. That is 1,800 into 25, which is equal to 45,000. Now 93 plus 45, how much? Which is 1,38,000. Sir, after making this notional call, cash available with the liquidator will be 1,38,000. This is imaginary figure only. Now, out of this 1,38,000, if I make payment to preference shareholders, so preference shareholders 1 lakh straight away I will pay. So remaining balance available with the liquidator will be 38,000. So balance available with liquidator. Now this 38,000 I should need to distribute among all the classes of equity shares. All the classes means right now all are fully paid up. There is no difference for me. But out of this 2,000, I will only distribute to 1,800 equity shares only because remaining 200 equity shares while making a call, they are not responded. That's why I will not distribute anything to them. Now 2000 plus 1800, total 3800 equity shares I should need to distribute equally. That means surplus cash distributed among the equity shareholders is equal to 38,000 divided by 3,800 shares. How much, guys? 38,000 divided by 3,800. It will be 10 rupees per share I should need to distribute. Now concentrate, guys. Therefore, real call money to be made. How I should need to work out? There are two classes, class A, class B. Let us assume class A are fully paid up. Class B is partly paid up. Now, what I told, notional call for class A, nil. For class B, notional call, how much per share? At the rate of 25 each. So that's why notional call 25. Okay. Distribution, surplus cash distribution. A is 10 rupees per share. B is also 10 rupees per share. Therefore, here net distribution 10 rupees. Here notional call 25 I will call. Again, I will distribute 10 rupees means 15 rupees I will make a call. Do you understand? So that's why the real call money to be made from class B shareholders will be at the rate of 15. Now let's check, all of you concentrate how it will work out. Cash available with the liquidator before making payment to preference shareholders was 93,000. Concentrate, all of you. In the real time scenario, what happened? I am telling you 93,000 is the real cash. Once I will make a call to the extent of 15 from 1800 equity shares, it will become 1800 into 15, which is 27,000. This is the actual call. Then 1,20,000 will be the amount. From here, I will repay to the preference shareholders. That is, preference shareholders will be 1 lakh. Then the surplus cash will be 20,000. This 20,000 I should need to just distribute it to the class A shareholder. Class A shareholders are 2,000. 2,000 into 10, which is equal to 20,000. If I distribute such 20,000 to class A shareholders, then cash availability with the liquidator will be nil. This is the actual distribution. So that means what I should need to do right now? First, I'll make a call from the other class. So call money from 1800 equity shares at the rate of 10 each. Call money how much? Sorry, at the rate of 25 each, not 10, sorry. At the rate of 25 each. So if I make a call, how much money I will get? 27,000. So once I will get the 27,000, sir, this is receipt, not payment. I'm so sorry. This should need to be recorded here. Call money from 1800 equity shares at the rate of 25. This is receipt now. I recorded under payment, sorry. So after receiving this 27,000, first I should need to make payment to preference shareholders, which is 1 lakh. Then equity shareholders for the other class, 2,000 equity shares at the rate of 10 rupees each. That is 20,000 I should need to pay. This is the distribution I should need to follow. So for this, you can check working note number 1. For this also, you can check working note number 1. So anyone having any doubt, just let me know, guys. Why are we distributing 20,000 only to class A, sir? Why are we distributing 20,000 only means you can check this procedure now, why we are doing like this. How much they contributed class A? Class A contributed at the rate of 100. But still, no need to distribute the 100 rupees. Depending upon the availability only we will distribute, right? Do you understand my point here? Sir, what I'm trying to do here, first, I want to try to make all the equity shares as fully paid up. For that purpose, I make the notional call. Once the notional call made, the total cash availability is 1,38,000. I paid the amount to the preference shareholder 1 lakh. Then balance cash available with the liquidator is 38,000 only. Even though shareholders, equity shareholders contributed 100%, now there is no cash availability with the liquidator to repay them. So that's why I can able to repay to that extent of 38,000 only. I have 3,800 equity shares. I can able to distribute 10 rupees per share only. That's the reason why Class A shareholders will get 10 rupees. Do you understand? Sir, Class B also will get 10 rupees. When? If they contribute 25 rupees per share. Sir, asking 25 again giving back 10 rupees, it really not good. So that's why rather than asking 25, it is better to ask the net amount is 15. The cash is not available with the liquidator. The cash itself is sufficient to repay to the preference shareholders. After that, very penny amount is there with the liquidator to repay among the equity shareholders. That's why equity shareholders are not getting their full amount. Okay. Oh, guys, this is repetitive question. Again, you asked because so many persons are joining at different timings. I think so. Sir, when the classes for May 2024 start, guys, this is not my cup of tea. Please ping a question to your ICAI. So as I told you, they will start nearly in the month of November, or they may have the announcement in the month of October. Okay, the schedule will be released. Okay, fine. Next. So let me consider one more question for the discussion for liquidated final statement only. Uh, so you can consider problem number 10 because it is a little bit different problem. Okay. So just I'm giving a 1 minute absorption time. So please have a look. Then we'll start problem number 10. Yeah, shall we start problem number 10? Yeah, for this payment, any method you can use, guys. Okay, for this distribution, there is no issue. Whatever the method you want, you can just utilize because both the methods suggested by me, right? But in generally, at the time of preparation of liquidator final statement, it is better to follow method number 1. If they ask question specifically, it is better to follow method number 2. So you can come to problem number 10, guys. Confidence Builders Limited gives the following ledger balances as on 30th September 2013. Land and building given, sundry current assets given, profit and loss account debit balance, again which is lost to the organization, debenture issue expenses not written off, which is miscellaneous expenditure not written off was given. So in fact, these two are not the assets. Okay. These are form part of equity, not equity share capital, equity. We can call it as shareholders fund. Okay. Share capital, 11% preference shares of rupees 10 each, 10,000 equity shares of 10 each fully paid up, 5,000 equity shares of 10 each partly paid up. 13,000 debentures are given, mortgage loan is there, bank code is there, creditors for trade, which is nothing but trade payable. Income tax arrears, assessment concluded in July 2013. For 2011, 12, 21,000 need to be payable. 22, 2013, 5,000 need to be payable. So, I mean, 11, 12 and 12, 13 related income tax returns assessment was done in the year 2013 actually. You know, the income tax have the right to assess, reopen the cases for the past 7 years as well. Okay. So that's why in 2013, 11, 12 assessment and 12, 13 assessment was done. Whatever the amount which is payable in the form of income tax to the government is straight away preferential creditors. Okay, don't ignore this. Preferential creditors. Now, mortgage loan was secured against land and buildings. Now, mortgage loan is a secured creditor with fixed charge. Then what about the land and building? Land and building is assets specifically pledged. Okay. Debentures were secured by a floating charge on all other assets. So whenever debentures having a floating charge on all assets, which is secured creditor with floating charge. Next, the company was unable to meet the payments and therefore the debenture holders appointed a receiver for the debenture holders. If you really remember, in internal reconstruction, we done one problem. They given the receiver for debenture holder statement. Initially, we thought it is a balance sheet, but later on we realized that it is not a balance sheet. We prepared a balance sheet from our own by giving the deficit or by giving the P&L account debit balance as a balancing figure. So like that, the company is unable to settle the payments to the debenture holders. That's why debenture holders initiated for that liquidation. That's why they appointed the liquidator at that point of time, who is known as a receiver for the debenture holders. Now, two different liquidators are coming to the picture. One is receiver for debenture holders and the other one is the real liquidator. What receiver for debenture holders will do? He will realize the assets. He will settle till the debenture holders payment. Once the debenture holders payment will be over, then he doesn't come into the picture. Whatever the surplus cash available with the receiver for debentures, receiver for debenture holders, that amount will be handed over to the real liquidator. Then liquidator will conduct the remaining liquidation procedure. Do you understand? That is the specialty of this problem. So that is the reason why I consider this problem for the discussion aspect. So now if you check, initially debentures appointed the receiver for debenture holders. He brought the land and buildings to the auction and I realized 1,50,000. That is cash realization from land and building is 1,50,000. From that 1,50,000, mortgage loan is 80,000. Straight away secured creditors with fixed charge over. The surplus will be 70,000, will be in the hands of receiver for debenture holders. Next, he also took charge on sundry assets of the value 2,40,000 and realized 2 lakhs only. Realization is important for me. So which is A and SP? From A and SP, he got straight away 2 lakhs. The bank overdraft was secured by a personal guarantee of two of the directors of the company. And on the bank raising the demand, the directors paid off the due from their personal resources. Sir, company taken a bank loan from a banker. At the time of availing such bank loan or the bank OD, the two directors give the personal guarantee. We can generally call it as surety. Okay. So both the directors just provided the surety on such bank OD. Now the company is in the process of liquidation. That's why banker raised the same fact or the same case to both the directors, and both the directors just paid out of their personal resources. That means what company feels, if the directors paid the bank loan, then company should need to pay to the directors, right? It's ultimately the company's liability. If directors paid from their personal resources, then company should need to be paid to the directors right now. So company will not think about the bank OD right now. Company only think about the directors payment. Sir, amount payable to directors, is it secured or unsecured? There is no security. Directors provided the security for the bank OD, but company may not provide any security previously to the directors, right? Directors just paid out of personal resources. That's why amount payable to the directors due to making payment to the bank OD will be considered as unsecured creditor. So that means the amount of bank OD indirectly is amount payable to director, which is unsecured. Okay. That is the point he conveyed from here to here. Okay. Next, cost incurred by the receiver were 2000, which are nothing but liquidation expenses incurred by the receiver for debenture holders. And the liquidator incurred 2800. So liquidation expenses incurred by receiver 2000, the real liquidator 2800. The receiver was not entitled to any remuneration, but the liquidator was to receive 3% fee on the value of the assets realized by him. Preference shareholders had not been paid dividend for the period after 30th September 2011. Guys, just yesterday class, I forgot to tell you, if at all any preference dividend, which should need to be payable at the time of liquidation, it should need to be paid along with the preference shareholders' capital. So that's why whatever the dividend is in arrears, such dividend we should need to discharge. And interest for the last half year was due to the debenture holders. So debenture holders itself is floating charge. That's why the last 6 months debenture interest is also the floating charge. I told you the debenture interest after the date of liquidation before making settlement of such debentures will be payable if the company is solvent, otherwise no need to pay. But here what he is conveying, interest for the last half year. Interest for the last half year means before liquidation date only he is telling. So whenever he is talking about before liquidation date, so irrespective of the fact whether the company will be solvent or insolvent, it's the obligation of the company. It should need to be settled along with the debenture holders principal. That is the reason why I'm not talking anything about the solvency of the company right now. Rest of the assets were realized at 1 lakh. Who realized? Liquidator realized. Prepare the accounts to be submitted by the receiver and liquidator. Now, receiver for debenture holders final account we should need to prepare. Liquidator final account also we should need to prepare. Both are same, just based upon their individual realizations and individual making of payments. Just we should need to prepare both the statements. Is it fine? Shall we start doing this in our OneNote? So problem number. So first, receiver for debenture holders. Sir, but only last 12 months government dues can be preferential creditors. This is last 12 months only, na? When assessment concluded? 2013. When liability arised? 2013. When the liquidator statement is going to prepare? 2013, 30th September. Right? Liability, when this liability, in the last 12 months, whatever the liability is arised, in July only liability was arised. When the assessment was done, sir, that is related to which period? That is irrelevant for me. That may be related to 2008, 7, anything. But when that liability was arised, within last 12 months only liability arised, right? Because in July only assessment was concluded means just 3 months only elapsed from the date of liquidation. That's why we should need to consider the entire taxes for preferential creditors. Do you understand? Don't be confused. Arising of the liability. Hope you clear, Darshan. Okay, fine. Let me continue the discussion, which is receiver for debenture holders. So initially, receiver for debenture holders realized land and building 1,50,000 and other assets for 2 lakhs. So let me consider first A and SP, that is assets not specifically pledged first. How much? 2 lakhs. Then ASP land and building he considered. He realized the land and building at 1,50,000, right? Tell me guys, it is clearly given now. Now, out of this land and building, he paid secured creditors with fixed charge, mortgage loan of 80,000. That is mortgage loan 80,000. So 1,50,000 minus 80. How much? 70,000 will be the net surplus. Only these two different type of assets only realized by the receiver. And it is also clearly given that 2,000 was incurred as a cost by the receiver in the order, that is what you can call liquidation expenses by receiver will be 2,000. So liquidation expenses, liquidator, those were incurred by liquidator. You can ignore right now. The receiver was not entitled to any remuneration. That's why there is no liquidator remuneration for the receiver. I think so. Nothing much. Then in the order of making payment, he'll start making payment to the preferential creditors first. So preferential creditor here 21 plus 5. 26 is preferential creditor. Sir, trade payable is unsecured. Now bank code is also unsecured. Mortgage loan we done. 13% debentures along with their interest, secured creditors with floating charge. That's why the one and only preferential creditor is government taxes. So which is how much? 21 plus 5, 26,000. Then he will pay secured creditor with floating charge. That is debenture holders. Principal plus interest. You know, right, in the presentation past, first I will present secured creditors with floating charge. Later only I will present the preferential creditors. That's why I presented like this. So principal is 1,50,000. Last 6 months interest means 1,50,000 into 13% into 6 by 12. 9,750. So that is 1,50,000 plus 9,750 will be 1,59,750. So 1,59,750. That's right. Then receiver for debenture holders will not realize any other asset, will not provide payment to any other party, because he appointed only to protect the interests of the debenture holders. Now debenture holders payment was done. What are the surplus cash he have on his hand? Just he'll hand over that amount to real liquidator. Now can you please check how much cash is available with the receiver for debenture holders after this payment? 2 lakhs plus 70,000 minus 1,000 minus 1,59,750 minus 26,000. So 82,250 just he will hand over to liquidator. Am I right? You can just cross verify this. Oh my god, where it is here. So this prolong will be done. Yeah, this one, right? 82,250. 82,250. So exactly handovering to the liquidator. Now you can start liquidator final state. So just I cross verified at this moment for knowing the accuracy of the figures. That's it, nothing else. So liquidator final statement. So cash received from receiver for debenture holders. First, how much? 82,250, right? After this, liquidator realized one group of assets. He got 1 lakh, right? That is rest of the assets. That is simply realization from assets by the liquidator. So that is 1 lakh. There are no other realizations from liquidator apart from this 1 lakh. Then in the order of making payment, first, it is given that cost incurred by the receiver 2000 and cost incurred by the liquidator 2800. That is liquidation expenses 2800 by liquidator. Then liquidator will also get the remuneration. Receiver, there is no remuneration, but liquidator was to receive 3% fee on the value of the assets realized by him. How much value of the assets realized? 1 lakh. That's why liquidator remuneration is 1 lakh into 3%. That will be 3000. Next. After this, in order, preferential creditors entirely paid by the receiver for debenture holders. Secured creditors with floating charge was also paid by the receiver for debenture holders. So that's why next in unsecured creditors, the first unsecured creditor is trade payable. So let's start with the trade payable here. Trade payable, how much? 32,000. Okay, total unsecured creditor, let me give here. And directors, payment related to the directors, that is bank code related part, 30,000. Any other unsecured creditor is there except this? Think so. There is no other liability also exist. So 32 plus 30, total unsecured creditors will be 62,000. Now, after making payment to unsecured creditors, how much cash is available with the liquidator? Can you have a look? 80 to 250 plus 1 lakh minus 2,800 minus 3,000 minus 62,000. 1,14,450 balance is available with the liquidator after making payment to unsecured. Now first, 11% is preference shareholders, they can able to pay wholly. So 11% is preference shareholders. Just they paid as it is, that is 1 lakh. Now after this payment, cash available with the liquidator will be 14,450 only. Now there are two different types of equity shareholders are there. One is 10 rupees fully paid up and another one is 7.5 partly paid up. Now what you should need to do, you can make a notional call. So let's go for the notional call as usual procedure at the rate of 2.5 each. That is 2.5 into 5,000. How much you will get? 2.5 into 5,000, which will be 12,500. Then what will be the total amount? 14,450 plus 12,500, which is 26,950. Now after this, all the equity shares are equally paid up. Then 5,000 plus 10,000, 15,000 equity shares. Therefore, surplus per share is equal to 26,950 divided by 15,000 shares. It will be 1.796. I'm getting 79 means 1.79. You can consider or 1.8. One second, guys. I think so. We missed somewhere. What is that? Preference shareholders also have arrears of preference dividend. I'm so sorry. I think so. Debenture holders, we entirely done. There is no debenture interest. But preference shareholders had not been paid dividend for a period of 30th September 2011 he given. So that means we should need to pay the preference dividend as well, na? Tell me, guys. So after 30th September 2011 means now the liquidation date is 30th September 2013. How many number of years preference dividend is arrears? 30th September 2011 to 30th September 2013. Okay, I forgot to include this. 2 years preference dividend is arrears. 2 years preference dividend is arrears means 1 lakh into 11% is 11,000 per annum. Then 2 years means 22,000. That means total amount payable to the preference shareholders is not 1 lakh. That is 1 lakh plus 22,000, that will be 1,22,000. 1 second, let me rework this. I'm so sorry, guys. 1 second. Just in the flow, I missed it. So don't directly make payment to the preference shareholders first. Now, first, all of you, please check the cash availability with the liquidator. 82,250 plus 1 lakh minus liquidator expenses 2,800 minus liquidator remuneration 3,000 minus 62,000 unsecured. Now cash available with the liquidator is 1,14,450. But amount payable to preference shareholders was 1 lakh is principal. Arrears of preference dividend is for 22,000. Total 1,22,000. Now the cash is insufficient to make payment to the preference shareholders. Then liquidator have an option to make a call because partly paid up equity shares are there. Now you can imagine notional call is there. Once notional call is there, 5,000 multiplied with 2.5. So which is equal to 12,500. Then after this cash available with the liquidator, 1,26,950. Now the cash is sufficient to repay the amount to preference shareholders. So less amount paid to preference shareholders. That is 1,22,000. Still how much balance is there? 4,950. Now this 4,950 you can distribute among the 15,000 equity shares. Therefore surplus per share is equal to 4,950 divided by 15,000, which is 0.33 per share. Okay, but we should need to decide the real call, right? For that purpose, what we are doing, there are different classes of shareholders are there. So you can consider fully paid up equity shares, partly paid up equity shares. Okay, then notional call. So for fully paid up notional call is nil. Partly paid up notional call is 2.5. Then surplus distribution. Here 0.333 we are distributed. Here also 0.33 distributed. That's why for fully paid up equity shares, net, we are not asking anything. We will only distribute. For partly paid up, we are making a call for 2.5. Again, we are distributing 0.33. That means 2.5 minus 0.33. It is better to make a net call of 2.17. Am I right? So if you make a call 2.17 for each and every equity shareholder of the partly paid up equity shares, then how much amount you will get? Before all such things, cash available with the liquidator, 1,14,450. Real distribution, I am telling you. This is the cash availability. Once I make the call, it will be 2.17 into 5,000. 10,850. So I got 10,850. Now cash available with the liquidator, real cash available with the liquidator is 125,300. Out of which just he will make distribution to the preference shareholders for 1,22,000. So just you can distribute 1,22,000. Still how much cash is available? 3,300 cash is available. So for this 10,000 equity shares, I committed to distribute at the rate of 0.33. That is 10,000 into 0.33. Just distribute, which is equal to 3,300. So then cash available with the liquidator will be nil. That is the distribution pattern. So that means what I should need to do here first, call at the rate of how much? Sorry, call at the rate of 2.17. 2.17 from 5,000 equity shares. Then how much you are getting? 2.17 into 5,000, 10,850 you will get. Then you can start distribution to preference shareholders first. That is 1,22,000. You can just clearly give the principal amount and arrears of dividend as well. Then equity shares amount payable to equity shareholders, 10,000 equity shares you will provide at the rate of 0.33, which is 3,300. This is liquidator final statement as well, guys. Okay. That's it. Just let me know anyone having any doubt on this. So we done two problems. Two are different problems, but more or less the adjustments will be look like the same in examination point of view as well. But you should need to read the problem a little bit carefully. All the information is there in the problem itself. Just you can consider accordingly. So actually still two more concepts are pending from my side. That is, one is list B contributories. One is list B contributories. And the other one is statement of affairs. Okay. So let's do one thing at this moment. So you can just go for the break. So please all of you assemble by in and around 8:15. Okay. So then let's start with the list B contributory first, then followed by statement of affairs. Okay, then we have the sufficient time to close this chapter. So just please all of you assemble by 8:15, guys. Hi guys, welcome back. So let's first check with list B contributories concept. Then we'll have a problem based on this particular concept, then followed by statement of affairs. So first of all, who are list A contributories? Who are list B contributories? How list B contributories are different from list A contributories in case of liquidation of companies? First, I will try to explain. Then what is the significance or the relevance of this concept in this particular chapter, you may understand. Okay. So, for example, in a company, the shareholders who are present as on the date of liquidation, we can technically known as list A contributories. For example, what I want to say here, the date of liquidation is, let us assume in the previous problem itself is 30th September 2013, right? Which is date of liquidation, right? Now, who are all the shareholders exist as on this particular date? We can call it as list A contributories. Okay. Then it is whose responsibility to repay amount to the liquidators if the existing shares are partly paid up and the cash is insufficient to repay to the other liability holders or other type of shareholders. It's whose responsibility? The existing shareholders only. Just now we done some problems or couple of problems based on this concepts only. So if you check in the last problem here, there are two different types of equity shares are there. One is 10,000 and another one is 5,000. Here 7.5 is partly paid up. Then who we asked? This shareholder only, right? If the cash is insufficient and if the existing equity shares are partly paid up, then the liquidator have a right to raise a call from that particular shareholder. A right to raise a call to that particular shareholder. So in that case, the existing equity shareholders, we are known as list A contributories only. That means you know this concept already unknowingly. List A contributories liability itself is the maximum worth is unpaid value. The maximum liability itself is to the extent of unpaid value. That's it, right? And one more important fact just I want to convey to you. It's always liquidator choice is first he should need to go to the existing equity shareholders which are partly paid up, and whatever the necessary money he will just simply ask from the such shareholders. Then he will get that money, he will make payment to the respective parties. Then who are these list B contributories, sir? Is this liability will be arised in case of list B contributory as well? Yes, liability will be arised in case of list B contributory as well. I'll give you who is list B contributory first. In the same example, not in this problem, in the previous problem, we've seen one thing. What is that? While making a call by the liquidator, some of the shareholders unable to pay the money. Here 2000 equity shares are there, out of which 75 paid up. All these 2000 equity shares are list A contributories only. But out of this 2000 equity shareholders, 200 equity shares are unable to pay the call money. Now, at that scenario, liquidator will have a right to ask the previous shareholder. Now, this 200 equity shares are there, right? About these 200 equity shares, who holded such equity shares, he will check. Let us assume these 200 equity shares were holded by X. Now, how X got these shares? So, X got these shares from, let us assume U. So, now U will become the list B contributory. X will become the list A contributory. That means when list B contributory liability will be exist, if the list A contributory became insolvent or unable to recover call money from the list A contributory, then liquidator have a choice to ask money from the list B contributory. So to tell technically the exact meaning of list B contributory, list B contributories are those contributories who transfer their shares within 12 months from the date of liquidation. Let us assume the date of liquidation is September 30th, 2013. In the past previous 12 months, who have all shared or who have all transferred their shares, we can known as list B contributory. Do you understand? One more time I'm repeating. List B contributories are such type of shareholders who transferred their shares to the existing equity shareholders in the past 12 months from the date of liquidation. We are technically known as list B contributory. Next. Sir, what is the liability of the list B contributory? What is the liability of the list B contributory, sir? The first and foremost point you should need to remember, if list A contributor fails, then only list B contributory liability will exist. Then what is the maximum liability? Maximum liability of the list B contributory. The maximum liability of the list B contributory is outstanding creditors exist as on date of transfer and continue to exist as on date of liquidation, or unpaid value of shares transferred. Whichever is lower will be the maximum liability. If I tell in terms of, you know, in theoretical approach, you may little bit confused or you may not appreciate in proper manner. But if I take an example, so everything you can simply correlate. Let us assume the same example, okay? So you transferred shares to X. As on which date? As on 1, okay, 11/20/12. Now 1/11/2012, you transferred 200 shares to X. Same. Now as on that date, the outstanding creditors balance was, let us assume, 5,000 rupees. So unpaid value per share is at the rate of 2 rupees. That is 8 rupees was already called up and paid up. 2 rupees was unpaid value. Now what is the maximum liability of this B list contributory? That is to the extent of unpaid value, 200 into 2, which is 400, or outstanding creditors exist as on date of transfer and such 5,000 still exist as on date of liquidation. If in between such 5,000 we repaid, then liability doesn't arise. Do you understand? That means if the 5,000 is still exists, no sir, out of 5,000, 3,000 was paid, still 2,000 is there, then you should need to consider such 2,000. Outstanding creditors exist as on date of transfer and continue to exist as on date of liquidation. Whichever is lower, here let us assume it was not paid in between. That's why 400 or 5,000, whichever is lower, we can treat it as a liability of the list B contributory. The maximum liability of the list B contributory. Do you understand this point, all of you? So this is the base concept of list B contributories, guys. Sir, if more than one list B contributory is there, how we should need to distribute such liability among the existing list B contributories? Let me explain through some more or through next example. Okay, I'll create one more example for your reference, guys. Let us assume A, B, C, D. 4 contributories are there. A transferred shares to, okay, E, F, G, H. So same, this is 30th September 2013. So now A transferred shares to E as on 1/11/2012. So B transferred shares to F as on 1/1/2013. C transferred shares to G as on 1 1st February 2013. So D transferred shares to H as on 1/5/2013. Okay. So number of shares transferred, here 1,000, here 500, here 1500, here 2000. Sir, unpaid value per share. Okay. For all the cases, let us take the same value. So unpaid value at the rate of 2 rupees. Here also at the rate of 2, at the rate of 2. Just for our convenience, I considered. So outstanding creditors as on that date, here outstanding creditors was 5,000. Here outstanding creditors was 8,000. Here it is 10,000. Here it is simply you can take 15,000. Okay. Now what I required, the maximum liability of list B contributories you should need to work out. Now tell me here unpaid value 5,000 into 2, which is unpaid value I'm talking. Unpaid value is 10,000 here. So not 5,000 is not shares. I'm so sorry. 1 second. 1,000 into 2, 2,000 is the unpaid value. Here 500 into 2, 1,000 will be the unpaid value. 1,500 into 2, 3,000 will be the unpaid value. 2,000 into 2, 4,000 will be the unpaid value. That is okay. There is no issue for that. To know the maximum liability of the list B contributory, apart from the unpaid value of the shares transferred, we should also require outstanding creditors exist as on date of transfer and continue to exist as on date of liquidation. Now, in the first transfer, yeah. So in the first transfer of 1,000 shares, outstanding creditors was 5,000. Now for this 5,000, who are all having the responsibility? Because this 5,000 is exist at the time of transfer of shares by A to E, the same 5,000 at the time of transfer of the same 5,000 shares. I'm so sorry. At the time of transfer of this 1,000 shares from A to E, this 5,000 creditors exist. And the same 5,000 creditors also exist at the time of making transfer of shares by B to F. And the same 5,000 also exist at the time of transfer of shares from C to G. And the same 5,000 creditors exist at the time of transfer of shares from D to H as well. How you know that, sir? In this 8,000, this 5,000 is there. In this 10,000, this 5,000 is there. In this 15,000, this 5,000 is there. That means on this 5,000, who are all responsible, sir? A is responsible, B is responsible, C is responsible, D is responsible. In which ratio they are responsible, sir? In the ratio of the shares they transferred. That means for the liability of 5,000, for the liability of rupees 5,000, who are all responsible? A, B, C, D. In their respective shares transfer. Respective shares transfer means here 1,000, here 500, here 1,500, here 2,000. Now, you can distribute in their ratio. So 5,000, 1,500, 1,500, 2,000. So all will be simply divided with 2. 2 is to 1 is to 3 is to 4. This is the ratio, right? Correct? Yeah, this is the ratio. Now 2, 1, 3, 3, 6, 4, 10. So 5,000 into 2 by 10, which is 1,000. Okay. Next, 5,000 into 1 by 10, which is 500. 5,000 into 3 by 10, which is 1,500. And 5,000 into 4 by 10. So which is equal to 2,000. So for this liability of 5,000, A will contribute 1,000, B will contribute 500, C will contribute 1,500, D will contribute 2,000. That is the individual contribution of liability towards this 5,000. Next, the incremental liability you should need to check, because out of this 8,000, we already done with 5,000. The incremental how much? 3,000. On this 3,000, who are all responsible? A will not be responsible, because at the time of arising of this 3,000, A doesn't come into the picture. A was already transferred their shares. That's why the excess on this 3,000, B, C, D are responsible. So for the liability, the incremental liability of 3000, the incremental liability of 3000 rupees 3000, 1:3:4, right? A 0 anyway, then you can assign to other persons like 3000 divided by 8, that is 375, and 3000 divided by 8 multiplied with 3, which is 1125. 3000 divided by 8 multiply with 4, which is 1500. Do you understand? Next, the incremental liability of 2000, the excess 2000, C and D only responsible. So that's why for the 2000, you can just assign to only C and D. So incremental liability of rupees 2000, only C and D means 3:4 only. So 3:4 means 2000 into 3 by 7, 857 here. 2000 into 4 by 7, 1143 here. Okay. Next. So the next liability is, incremental liability is how much, guys? 10,000 to 15,000 means 5,000. Only D is responsible. So on the incremental liability of rupees 5,000, directly you can just give into D. Now you can check the individual total liabilities per each and every equity shareholder, per each and every list B contributory. A total is 1,000 here. So B total is 500 plus 375, 875. C is 1500 plus 1125 plus 857, which is 3482. For D is 2000 plus 1500 plus 1143 plus 5000, which is equal to 9643. Sir, which is based upon the outstanding creditors concept. Sir, based on unpaid value. Unpaid value, which is how much, guys? Based on unpaid value, I already worked here above. Unpaid value 2000, 1000, 3000, 4000. You can give the same thing. 2134. One second. Yeah, which is 2000, 1000, 3000, 4000. Whichever is lower will be the net liability by list B contributories. So 1000 or 2000, whichever is lower, 1000. 875 or 1000, whichever is lower, 875. 348 to 3000, whichever is lower, 3000. 9643, 4000, whichever is lower, 4000. Therefore, total liability of list B contributories is equal to 437, 718, 8875. So like this, you should need to work out the liability of the list B contributories, guys. Okay. Hope you understand the concept of list B contributories with this example. So let's consider one direct problem which is there in the study material based on the list B contributories, guys. Which is problem number 4. All of you please come to problem number 4, guys. In a liquidation which commenced on April 2nd, 2011, certain creditors could not receive payments out of the realization of assets and out of the contributions from A-list contributories. The following are the details of certain transfers which took place in 2010 and 2011. Okay. Shareholders, number of shares transferred at the date of ceasing to be a member. That means previous shareholders information just is providing. Date of ceasing to a member also just they are providing. At the time of ceasing to a member, outstanding balance of creditors are also giving. All the shares for 10 rupees each, 6 rupees were paid up, ignoring the expenses of and remuneration to all the liquidators. Show the amount to be raised from the various persons listed above. Now, let me know first one thing. When the liquidation is going to commence? April 2nd, 2011. Exactly 12 months before means, since from April 3rd, 2000, 10 to April 2nd, 2011 will be exactly 1 year. Any transfers occurred before this April 3rd, 2010, which are not form part of list B contributory, right? So 1st March 2010, before April 3rd, doesn't come into the picture. Transfer made after April 3rd, yes, 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 yes. That's why don't consider this part, just ignore. Now A, B, C, D only I should need to consider for computation of maximum liability of the list B contributories. Now, let me give here problem number 4. So total parties A, B, C, D, A, B, C, D. So number of shares transferred also given 1000, 1500, 300 and 200. 300 and 200. These are the number of shares transferred. And first, the outstanding creditors exist 6,000. On such 6,000, who are all responsible? A, B, C, D. Because as on 1st May 2010, it is there. So 6, 7,500, 8,000, 9,500 in incremental approach, we should need to assign the responsibility. That's when 6,000 whole will get the responsibility. That is in the ratio of 2 is to 3 is to 6 is to 4. The ratio is correct. Or we'll do one thing. All will not this ratio. All will we can divide with 25, right? 1000 divided by 25, which is 40 here. So 40 is to 1500 divided by 25, which is 60. So 300 divided by 25, which is 12. So 200 divided by 25, which is 8. All will again divide with 2. This is not the correct ratio. Once again, this is the correct ratio. 2 20s or all will divide with 4, not 2. All will, we can simply divide with 4. If we divide with 4, 4 10s are 40, 10 is to 4 15s are 60, 4 3s are 12, 4 2s are 8. This is the ratio, guys. 10 is to 15 is to 3 is to 2. Am I right? Yeah, this will be the correct ratio. If you just knock off 2 zeros everywhere, this will be the ratio. 10 is to 15 is to 3 is to 2. Now 3 2s are 5, 5 plus 15, 20, 20 plus 10, 30. Okay, total 30. 6,000 into 10 by 30, which is 2,000. 6,000 into 15 by 30, which is 3,000. 6,000 into 3 by 30, which is 600. 6,000 into 2 by 30, which is 400. Next, you can check the incremental liability wise. So incremental liability is 1500. For this 1500 incremental liability among BCD only. That's why here nil. So 15 is to 3 is to 2. 15, 3, 18 to 20. So 1500 into 15 by 20. So which is 1125. Next 1500 into 3 by 20, which is 225. Next 1500 into 2 by 20, which is 150. So that is all about 1500 incremental liability. Next 7500 to 8000. So which is 500. On 500, 3 is to 2. Nil nil. So 5 is to 3 means here 300, here 200. Next 8000 to 9500 incremental liability is 1500. So this entire 1500 directly you can assign to the last party here. Now you can count the total liabilities, guys. So here it is 2000. Here it is 4125. So here it is how much? 600 plus 225 plus 300, which is 1125. So for final party 400 plus 150 plus 200 plus 1500, which is 2000, 250. Correct? Now, unpaid value we should need to check. Unpaid value. Unpaid value means it is given 6 rupees paid up means 4 rupees unpaid value. Number of shares we already know. 4 rupees, 4 into 1000, 4000. So 4 into 1000, 4000. Next, 4 into 1500, 6000. Next, 4 into 300, 1200. Unpaid value into number of equity shares. 4 into 200, 800. So whichever is lower will be the net liability. Here it is 2000. Here it is 2000. Here it is 4125. Here it is 1125. Here it is 800. This is the maximum liability of the list to be contributories. Hope you understand this concept, guys. Do you have any doubt? Please, all of you, let me know at this stage. Is it all clear? Things related to list to be contributory. So sometimes there may be a chance to ask problem from list to be contributories as well, guys. Manisha, no sir. No sir means no doubt, sir, or it's clear. Manisha, if you have any doubt, just let me know, ma. If it's clear, no issues. Okay, fine, super. Right, then. So let me consider the last concept, which is statement of affairs. Okay. So, most of the things I will try to explain the statement of affairs through my PDF only. Okay. But first, let me give the background story for this. Sir, statement of affairs, who will prepare? Is it liquidator? No. Board of directors will prepare. I told you, right? To whom ultimately it should need to be submitted? Liquidator. So in this statement of affairs, all the assets and liabilities, is it actuals or estimates? It is not actuals, it is only estimates. Right? Next, the statement of affairs is going to be prepared ultimately in shareholders' point of view. That means ultimately shareholders getting surplus or deficit. We are going to represent. If you check the liquidator final statement, we are not preparing liquidator final statement in shareholders' point of view. How much cash we realized, how much cash we are distributing, just we are going to see. Just we are going to present. But this statement of affairs we are going to present. If the company is going to liquidate at this stage, shareholders, that is in case of equity shareholders, really how much they are getting surplus. So estimate how much deficit they may will get. Just we are going to represent. Okay. One more important thing, at the time of presentation of statement of affairs, liquidation expenses, liquidator remuneration, such concepts will not be considered, will ignore. You know why? Sir, before appointment of the official liquidator itself, the board of directors will prepare this. That too, we don't know what are the terms will be there for the liquidator remuneration. and how much cost will be incurred for the liquidation, they don't know. That's why they will ignore such things, because which is an estimate prepared by the board of directors. And one more important thing, the statement of affairs is going to be prepared in a particular format. So all the assets and liabilities, they are going to make it present under different lists. Different lists. So we already seen the list numbers, I think in yesterday's session itself. So just can you please all of you reback? Can you please all of you rewind? What are the different lists we discussed in the yesterday session? List A is for assets not specifically pledged, those assets which not offered as a security. List B is for assets specifically pledged. Tell me, guys. And in list B, apart from assets specifically pledged, we are also going to show secured creditor with fixed charge. List C, preferential creditors. List D, secured creditor with floating charge. Next, list E, unsecured creditors. List F, preference shareholders. List Z, equity shareholders. We should need to present the statement of affairs in their respective lists, and the existing assets and liabilities we should need to be segregated as per their lists, and that too we should consider estimated realizable value but not the book values. At the time of presentation of statement of affairs, we are going to consider the estimated realizable values or the estimated amounts to be payable to those parties. And you should also need to remember these issues. It should need to be prepared in shareholders' point of view to know the surplus or deficit, how much they are getting. Liquidation expenses, liquidator remuneration completely ignore, and the items should need to be presented in proper lists. Okay, fine. So with this background, first let me try to explain the format of statement of affairs. It is not a big deal. Let me try to explain the format here. So due to the lengthy format, I don't want to put it in my OneNote. Anyway, I'll share this, my written PDF with you. So if you check, my internal reconstruction written PDF was already uploaded. So once the particular chapter got completed, just I'm uploading that specific document. So today at the end of the day, I'll upload this part also. Then you have good idea. That's why no worries. So why sometimes I should need to be go in little bit speeder manner due to the lack of time and all such issues. So that's why it's my sincere request to all of you. You can just best utilize the resource which I uploaded. Everything, every content will be there. Okay. So because in the normal scenarios, to complete the amalgamation itself, I took 15 hours. So slowly each and everything we should need to tell. So liquidation part itself, it will take something like 12 hours. But here all the three chapters combinedly just they allocated or around 20 hours, right? So I'm not skipping the any content literally. If you can check, go back the ICA material also, everything was covered. Every model type of problem also covered. The only one thing is, okay, no written part, and sometimes just I'll directly go through with the PDFs and no reading of the content given in the material. Such issues were just I'm implementing to save my time. That's it. Okay. Fine. Okay. Coming to statement of affairs, list A, as I already told you, assets not specifically pledged. So out of the given assets which are not offered as a security, you can just consider here. So particulars, amount rupees, under amount which are estimates but not the actuals, just where they are given as ERV, estimated realizable value. For example, plant and machinery is there, sir, which is not offered as a security, give here. Sir, cash is there, which is never offered as a security, give here. Sir, for cash, book value, ERV, both are same. Okay. And one more important point, just I want to brought into your notice. What is that? Sometimes uncalled capital, they may provide in the problem. At that point of time, uncalled capital also you can put it under ANSP as per list A. You know the reason? I don't know really the liquidator will make a call to that particular shareholder, but liquidator have the choice or liquidator have the right to make a call for this share for this particular uncalled amount. That's why it will also act as one of the resource to utilize if the cash is insufficient to repay to the liability holders. Under this part, we should also include the uncalled capital. That's the reason why I told you statement of affairs is going to be prepared in shareholders' point of view, how much surplus or how much deficit it will be. Do you understand all of you this point? Fine. Next, list B, assets specifically pledged. For example, just I'm considering an example, just I'm taking a scenario for your understanding. A specific asset building is there. The estimated realizable value in the outside market, it is 10 lakh. So in the first scenario, let us assume bank loan is there for 8 lakhs. I told you list B will be covered two aspects. One is asset specifically pledged and the relevant loan part, which is secured creditors with fixed charge. Both I am comparing. So estimated realizable value is 10 lakhs and the relevant secured creditors with fixed charge is 8 lakhs. Then this building was entirely covers and the excess value I can carry forward to the surplus. The same surplus I will take it to the last column. No, sir, if you consider the different scenario, sir, bank loan is not 8 lakhs, sir, bank loan was 13 lakhs. Then this portion is not sufficient to cover the entire secured creditors with fixed charge. At that point of time, the difference I can consider it as a deficit. The deficit should need to be ranked as an unsecured creditor. Do you understand my point? Out of this 13 lakhs, 10 lakhs only covered means remaining 3 lakhs is straight away unsecured creditors. I'm going to settle such 3 lakhs unsecured creditors in the order of making payment. It should need to be presented something like this. What is that? First asset, the ERV, that relevant liability along with the amount. Sir, if the asset is excess, surplus, and carry forward to the last column. No, sir, which is deficit, ranked as unsecured creditors, will be paid along with the other unsecured creditors. Now, after completion of this, what is the total cash availability with the liquidator? This part plus this part. If they make it total, then they will get assets available for preferential creditors, secured creditors with floating charge, and unsecured creditors, including the shareholders as well. This is the amount available for all other parties other than secured creditors with fixed charge. Other than secured creditors with fixed charge means preferential creditors, secured creditors with floating charge, and unsecured creditors, and the shareholders as well. But here I not mentioned the shareholders due to the presentation issue. That's it. In the act, it is clearly given up to unsecured creditors you can present. Anyway, shareholders are the real owners of the company. So for the time being, just you can ignore this. After that, what we will do, I will tell you. This is the base, right? This is the amount available, right? Now the same amount we should need to consider here. That is assets available to preferential creditors, secured creditors with fixed charge and unsecured creditors. The same amount you can just brought down here. Sir, what is this, sir? This is liability structure. Under liability is left hand side one amount column is there, right hand side also one amount column is there, which is the gross amount, which is the net amount. What is the difference, sir? If you remember, we already discharged one loan, which is also a liability, but we given the title as a liability. So such first liability, you can put it here, secured creditors with fixed charge. Just to give the amount, but don't reduce because you already reduced here. To know the total liabilities or to present the total liabilities at a single point of time, just I'm mentioning the secured creditors with fixed charge under the gross amount column. No need to mention anything under the net amount column because we already settled to that secured creditors with fixed charge. Then you can mention assets available for preferential creditors, secured creditors with fixed charge and unsecured creditors. From here, you should need to start making payment in order of preference. First, preferential creditors as per list C, section 327. You know, taxes, holiday remuneration, death or disablement compensation, investigation expenses, PF gratuity, ESI payments, such all things you should need to put. After that, assets available to secured creditors with fixed floating charge and unsecured creditors, right? Because once preferential creditors payment was done, then the remaining should need to be distributed among the floating charge and unsecured creditors. Then as per list D, secured creditors with floating charge, like debenture principal, debenture interest up to the date of liquidation, such all things you can give here. After that, assets available as regards secured creditors with floating charge. You can present anyway assets available to unsecured creditors. You can present, or else assets available as regards. As regards means after settling. As regards means after settling. Assets available after settling secured creditors with floating charge. In any way we can tell, right? So that is the amount. From there, you should need to make payment to unsecured creditors as per list E. Then assets as regards unsecured creditors or assets available to shareholders you will get. There you will give list of preference share capital paid up capital straight away, and equity share capital paid up capital also straight away you should need to give. Sir, why we should need to give the paid up capitals here, sir? Whether we don't know whether we are paying the total amount or not, right? Based on the cash availability only we will pay. But as I already told you, statement of affairs we are going to prepare in shareholders point of view. If you let us assume the entire paid capitals enter, how much surplus or deficit they will get, you know, right? So based on the figure, if it is negative, then which is deficit available to equity shareholders. If it is positive, then surplus available to equity shareholders you may give. Sir, you may thought that as per statement of affairs, equity shareholders got the surplus, sir. But really at the time of preparing the liquidator final statement, equity shareholders even not get their full payment, sir. Yes, it may be the scenario. You know the reason? These all are estimates, not the actuals. That too, I didn't consider the liquidator remuneration. I didn't consider the liquidation expenses. Just it is a base document. It is not the real document. It will act as a base for something to know. Do you understand? Okay. Sir, in between one thing you ignored, na? Summary of gross assets. What is this summary of gross assets, sir? Now, if you add these two figures, I may not get the gross assets estimated realizable value because this is the net amount. This is not the gross. If you consider this amount, 1 second, sorry. If you consider this amount and this estimated realizable value of the ASP, if you add these two, then you will get the total summary of gross assets. So to represent it separately, just I'm considering total of ANSP how much, total of ASP how much. Just it is a presentation issue. In between list B and the liabilities portion, just you may present summary of gross assets. So to make it simple, if I go with one note, how you are going to present, I'll tell you here, concentrate. Statement of affairs. First you will start with the list A. Assets not specifically pledged. Give the total particulars, give the ERVs, estimated realizable values, make it total. Next, list B. After list A, list B. Assets specifically pledged. First, you can consider that specific asset. If it is building or plant and machinery, what are the case, maybe that amount. Estimated realizable value amount. Then the relevant liability, that is security creditors with a fixed charge. You can consider that amount. If the asset value is more than this, then which is surplus, carry forward to the last column. Sir, if the asset value is less than this, then deficit ranking as unsecured creditor. So this line and this line should be in equal portion. I mean, one by one we should need to add, right? Then if you add these two things, then you will get assets available for distribution among preferential creditors, secured creditors with floating charge, and other unsecured creditors. Now after this, you can present summary of the gross assets. Just it is presentation aspect I told you. So which is summary of gross assets. Summary of gross assets means total realization from ANSP, how much total realizations from ASP. This is not net, gross. Gross means anyway, this is gross figure. Here you should need to consider the gross figure, not this column. Okay. Then you will get the total amount realized from gross assets. Just this is informative in nature, nothing we will do. Then we'll start the liabilities presentation. Liabilities, here gross amount, here net amount. First liability you already paid, which is secured creditor with fixed charge. Secured creditor with fixed charge, you will represent only in gross but not in net, because For only informative in nature, only just you are representing all liabilities for presentation issue. Net liability we already paid. Then assets available for preferential creditors, secured creditors with floating charge and unsecured creditors. We already have the same figure. You can simply carry forward or brought down from there to here. Then from here, you should need to start making payments. First, list C payments, then list D payments, then list E payments. The relevant statements you should need to provide after making preferential creditors. Okay. Assets available to secured creditors with floating charge and unsecured creditors. After list D, there is secured creditors with floating charge. Assets available as regards secured creditors with floating charge. Something like that you should need to make it present. Then finally, after this, amount available to equity shareholders, then preference share capital, paid up capital, equity share capital, paid up capital. Then you will get surplus or deficit in shareholders' point of view. This is the presentation you should need to provide. Okay. So what we will do, let's take up one particular problem for our discussion, guys. Okay. Then you can understand this presentation issue as well. Then let me take up one problem which is based on statement of affairs. Yeah, all of you come to problem number 11. I think so. This is related to statement of affairs. Let me check the final statement. Yeah, prepare the statement of affairs and deficiency account also. This one I not yet explained, which is list H. Okay. We'll discuss about deficiency at later after completion of the statement of affairs. Yeah, please all of you come to problem number 11. Let me read. It was ordered to be wound up on 31st March 2012, on which date the following balances were extracted from its books: goodwill, building, land, fixtures, stock, debtors, cash, profit and loss account, debit balance also given. Share capital 10,000 equity shares of rupees 100 each. 5% debentures secured by a floating charge on all assets. Interest payable on these debentures. Bank OD secured by hypothecation of stock. Creditors. Further information. Something is there. Once again. Sir, bank OD is secured by hypothecation of stock means this bank OD is secured creditor with fixed charge. And the stock is ASP. And debentures given it is a floating charge. No issue. Further information, the amounts estimated to be realized are, these are not actuals, estimated to be realized are, estimated ERVs per each and every individual asset, simply they are given. Creditors included 6,000 on account of wages of 15 men at 100 rupees per month for 4 months immediately before the date of winding up. Indirectly, he is conveying that which is preferential creditor. 9,000 being the salaries of 5 employees at 300 rupees per month for the previous 6 months. No, previous 6 months we should not consider, only 4 months we should need to consider. If it is 4 months, 4 into 3, 12, 12 into 5, 6,000. Out of this 9,000, 6,000 will be preferential, remaining 3,000 will be unsecured. Rent for the godown for the last 6 months of 3,000, which is not a preferential creditor. Income tax deducted out of salaries, employees 1,000 and directors fee 500. Okay, so this 1,000 will be straight away, I mean, whatever income tax deducted on employee salary or directors, which is related to taxes payable to the government. That's why both we should need to consider it as preferential creditors. Okay. Next, this is the information they're given. You can ignore from here to here. I will tell you later why, because that is related to deficiency. In addition, it is estimated that the company would have to pay 5,000 as compensation to an employee for injuries suffered by him. This 5,000 is again a preferential creditor. Tell me, guys, death or disablement compensation, which was a contingent liability not accepted by the company, but still we should need to consider it as a preferential creditors as per section 327 provisions. you should need to prepare a statement of affairs for this. Now, one thing what I want to first convey here, what is the total amount of preferential creditors? First, you can count here 6,000 plus 6,012, 12 plus 1,500, 13,500, 13,500 plus this 5,000, 18,500. So preferential creditors 18,500. Okay, this is just for your reference. Now, let me start with solution with the help of my PDF, guys. Okay, I don't want to make it write this lengthy solution. So let it be explain everything with my PDF here. Okay, in PDF also it is not there. Let me check in my printed solution. In printed solution, I have this. Yeah. Fine, right? This is the statement of affairs as on 31st March 2012. So date was given 31st March 2012. First, we should need to start with list A, that is assets not specifically pledged. Except inventory, remaining all are assets not specifically pledged. Don't consider book values. Please, all of you consider the ERV, estimated realizable value. So, goodwill 1,000. It is there. Goodwill 1,000. 1 second. Goodwill 1,000 was given here. Next, building 3 lakhs. So, building 3 lakhs given here. Next, plant 525. Plant 525 given here. Next, fixtures 10,000. Fixtures 10,000 given here. Stock is ASP, not consider here. Let's consider later. Debtors 20,000. So debtors 20,000. Everything was given. Here cash itself is there. Cash is realized asset. That's why not estimate actual 500. So, but the stock where they considered under ASP, which is 31,000, they considered here the stock 31,000 under ASP list B. So that's why the total of list A, they are getting 8,56,500, which is estimated realizable value sold. Next, as per list B, so the stock is 31,000 and the relevant liability is there, right? The relevant liability security creditors with fixed charges 25,000. Now, asset value is in excess of the liability. That's why which is surplus. So surplus 6,000, which is carry forward to the last column as well. If you add 856,500 plus 6,000, which is 8,62,500 rupees, which are estimated total assets available for preferential creditors, secured creditors with floating charge, and unsecured creditors. The same thing I mentioned. Now, for informative in nature, summary of gross assets we should need to present, right? Summary of gross assets means 856,500 plus 31. These are the gross figures. So 8,56,500 plus 31, 887,500 is the summary of gross assets. Now, liabilities part, gross liabilities. I told you this is the gross figure, this is the net figure, this is the particulars. First, as per list B, security creditors with fixed charge, how much? The same thing first you should need to consider under gross, but not under net, only under gross, net nil. Then you can start making payment for preferential creditors as per list C first. Preferential creditors, how much guys we calculated already? Preferential creditors 18,500 we got, but here 18,000 they got. So where anything we done any mistake? Oh, now I got that point. What is that? Income tax deducted out of salaries of employees. Employees only they considered as a preferential creditors. So director is not an employee. So that's why they're not considered, they're not included this portion into the preferential creditors. Yes, that's correct. So now if you reduce this 500, then it will become 8,000 only. Okay. If you have any doubt, they will represent the preferential creditors below anywhere. Yeah. So they considered here. So please check here. Director's fee. This is not given properly. Income tax deducted out of salaries of employees thousands. This is director's fee only. This is not tax. So that's why I confuse a little bit. Amount payable to the director's fee is not a preferential creditor, which is unsecured creditor. It was given under unsecured. Okay. So preferential is only 1,800, that not 18,500. So that's why preferential just given 1,800. Please be note down that, make it correct from your side. So then once make the payment to preferential creditors, then remaining balance of assets available for secured creditors with floating charge and unsecured creditors, which is 844,500. Now I should need to work for secured creditors with floating charge, guys. Secured creditors with floating charge, 1,60,000, and the interest part is 4,000. Total will be 1,64,000. So the total as per listed is given 1,64,000. And the balance is 680,500, which is estimated surplus as regards secured creditors with floating charge. Then coming to unsecured creditors. So unsecured creditors, the total creditors is 36,000, right? Out of this 36,000, creditors included 6 plus 6, 12, 12 plus here 1,000, 13,000 we were reduced. Out of this 36,000, with the name of preferential creditors, I reduced 6 plus 6, 12, 12 plus this 1,000, 13,000 I reduced. 36 minus 13 means 23,000. So the remaining creditors I may treat it as unsecured creditors. So that's why 23,000 he considered it as an unsecured creditors. Once they reduce the unsecured creditors, remaining estimated surplus as regards unsecured creditors will be 657,500. Then preference share capital and equity share capital. Here we have only equity share capital, which is 10 lakhs is the paid up value. They given the 10 lakhs, then which is estimated deficit, estimated deficiency as regards contributories is 3,42,500, which is the negative balance actually. Okay. This is like how you should need to prepare the statement of affairs. Guys, let me know your people understand the content. Nothing is complicated here. Okay, just everything we should need to make it present. But the thing is, it is a little bit lengthy. That's it. So this is all about statement of affairs, but still the concept is not yet over because statement of affairs is having interlink up with another concept, which is statement of deficiency. What is this statement of deficiency? Statement of deficiency, which is going to be prepared as per list H actually. This is the first time we are coming across in list H. If you observe A, NSP, B, ASP, C, preferential, D, floating charge, E, unsecured, F, preference share capital, G, share capital, G, equity share capital. After G, list H. The list H will be the statement of deficiency. What is this list H, sir? List H will tells the causes for the deficiency. Here you got the deficiency of 3,42,500, right? In the statement of affairs, ultimately we get in shareholders' point of view 342,500 as a deficit. What are the causes or what are the reasons for this deficit? We are going to explain through list H statement of deficiency. I mean, let me give some background story about this without directly going this. In Companies Act 2013, what they told, through preparation of statement of affairs, board of directors simply they are telling that shareholders will simply end up with this much of surplus or shareholders will simply end up with this much of deficit. But what are the reasons for deficit or surplus? Can you please explain? That with that reason, board of directors along with the statement of affairs, they should need to provide a base document called statement of deficiency, which is as per list H. For that, it is given a privilege to the board of directors that at least the board of directors should need to go back 3 months from the date of liquidation. At least 3 months. For example, date of liquidation is 30th September 2013. At least 3 months, at least 3 years means they should need to go back as on 30th September 2010. This is at least period. They can go back more than that period as well. As on this date, first what they should need to work out, how much profit or loss exists. That is in general we can call it as reserves and surplus balance as on that date. Reserves and surplus balance as on this date. This is the base. From here onwards, we are working what are the implications happen, and as on 30th/9/2013, I will work out the reserves and surplus balance will be ultimately how much. So that is what I want to explain through statement of deficiency. Now, how I will get reserves and surplus, how much I had as on 30th/9/2010. If they directly provide, that is okay. If they are not provided directly, then I should need to derive this reserves and surplus. How you can able to derive the reserves and surplus? As on 30th 9 2010, if you know, one second guys, if you know the assets balance, consider all the assets minus outside liabilities, consider minus share capital also you can consider. Sir, out of the balance sheet, assets you consider, liabilities you consider, share capital also you consider. The remaining balance will itself will be reserves and surplus. Just you are considering the balance as a balancing figure. Assets minus liabilities minus share capital, you will get reserves and surplus. It may be positive, it may be negative. Okay, this is the base. Now, after deriving this reserves and surplus, one second, one note was stopped. Yeah. So after deriving this reserves and surplus, what I should need to do, sir? First, reserves and surplus, the base reserves and surplus, you consider, right? After this, what you should need to check, items which contributing the surplus, items which contributing the deficit or which reducing the surplus, you should need to present at one time. And items which causes for surplus or reduction of the deficit, you should need to present at one step. What I'm telling you, no. This reserves and surplus, if it is increased due to any factor, give that increase here. If reserves and surplus any decrease, give the decrease here. Then you will get reserves and surplus balance as on date of liquidation, which is nothing but deficit or surplus what you represented in case of statement of affairs. Now, which items are caused for increasing the deficit or decreasing the surplus? Both are same, just I'm using different terminologies, that's it. Which causes for increase in deficit or decrease in surplus? Sir, which causes for increase in deficit actually? If the company is attained any operational losses. So during these 3 years, company is attaining any operational losses? Yes, which causes for deficit only. Any abnormal losses? Any abnormal losses means maybe due to earthquake, maybe due to floods, maybe due to COVID situations, any abnormal losses, maybe for declaration of dividend. So even though company is getting profit, but it paid to the shareholders. Do you understand? That's why reserves and surplus ultimately decreased. So that's why you can just make it present. Simply, whatever the factors are cause for decrease in reserves and surplus, such all factors you should need to provide here. Maybe the realization losses. Do you understand? Sir, book value 10,000 is there, but the estimated realizable value is only 8,000 at the time of liquidation. Then 2,000 is the loss now. That loss also will cause for reduction of the surplus or cause for the deficit. So such all factors you should need to record here. Similarly, increase in surplus or decrease in deficit. Operating profit may will cause, abnormal profits may will cause, what that liquidation at the time of liquidation, that realization profits, maybe a particular asset value is for 5,000, but the estimated realizable value is 8,000, then 3,000 profit is there. So such all factors are cause for increase in reserves and surplus or decrease in deficit. Such factors also you should need to consider. Then the opening balance of reserves and surplus, then factors causing for a deficit, factors causing for surplus. If you add one by one, then you will get net deficiency or surplus as per the statement of affairs only. Whatever the surplus or deficit you shown in the statement of affairs, the same thing will be shown here. Sir, to get a better clarity, first I will do one thing. Let me show my PDF here. Sir, how to work out the statement of deficiency? Just here I'm checking. Statement of deficiency is a particular statement which clearly provides reason for surplus or deficit arised in the statement of affairs. Okay. So in the act, it is clearly given that from the date of commencement of the liquidation,
you can just go back 3 years back, from where you can work out the reserves and surplus balance. If assets is greater than liabilities plus capital, then which is positive reserves. If the assets is less than liabilities plus capital, then which you get the negative reserves. Simply we can call it as deficit or surplus, which is the base for our statement of deficiency. From there, you should need to reduce items contributing the deficit or reducing the surplus. Which are causes for contributing the deficit? Operational losses, abnormal losses, declaration of dividend and bonus shares, due to which reserves and surplus balance is going to decrease, and realization losses at the time of liquidation. All these are cause for contribution of deficit or reduction of surplus. Then items contributing the surplus or reduction of deficit, exactly in reverse manner you can think. If it is losses, if it is profit. If it is abnormal loss, this is abnormal profit. If it is realization loss, which is realization profit at the time of realization of assets, then ultimately you will get surplus or deficit as per list H, which should need to be equal to statement of affairs deficit or surplus. So let me check this particular concept with this problem. I not read the additional paragraph. Okay. So in this bracket, I ignored it intentionally earlier, right? Now let's check how to prepare the list H with the help of this particular problem, guys. 3 years ago, so exactly he is also considering 3 years ago from the date of liquidation. The debit balance in the profit and loss account was 77,925. And since that date, the accounts of the company has shown the following figures. Now, concentrate, guys. Let me take this figure at here 77,925. He is giving the reserves and surplus the base figure, which is loss. Deficit, he itself clearly told now that 77,925 is a debit balance. Debit balance means that deficit only. Further, 3 years, what happened? For the year 9, 10, 10, 11, 11, 12. He is having gross profit and the so and so expenses. If you reduce the gross profit with the total of expenses, you will get the net profits in each and every particular month. So please check the net profits here. So please check the net profits here one by one. For this year, net profit is how much? 8. Net profit or net loss? This is net loss. 65,000 minus 80,990, which is 15,990 is the net loss here. Okay, next 45,000 minus 66,245. 21,245 is the net loss here. Next 245, this is 40,000 minus 63,340. Here it is net loss 23,340. Guys, net loss means, is it item contributing to deficit or items contributing to surplus? Operational losses. Items contributing to deficit. Add all these 3 years losses, operational losses, 15,990 plus 21,245 plus 23,340. I got 60,575. So 60,575 is items contributing the deficit. Okay. Next. In addition, it is estimated that the company would have to pay 5,000 as compensation to an employee. Sir, if you pay additional compensation, which is not there in my liabilities, means which is also an additional loss, right? Sir, additional loss means which is also cause for deficit only. Okay. There are no other items. You can just go back to the realization, that is estimated realizable value with the book values. Because at the time of estimated realizable value is more than the book value for asset, which is profit, otherwise which is loss. Let me check one by one, guys. Goodwill 1,000, but in books how much it is? 1 lakh. 99,000 is loss. 1 second. Yeah, 99,000 is loss for goodwill. For building 3 lakh 50 and 3 lakhs, 50,000 is loss for building. Okay. Next, after the building, plant 525, 550, 25 is loss for the plant, realization loss. Then fixtures 10,000 was given, 23,000, 13,000 will be the loss for fixtures. Okay. Then stock 31 given, Stock 38 here, 7,000 loss again. So 7,000 loss. Then debtors 20,000 is given. Debtors here 25,000, that is 5,000 loss. Sir, due to cash there is no loss. Liabilities just we paid all at book values only. Now the total loss at the time of realization, how much? 99,000 plus 50,000 plus 25,000 plus 13,000 plus 7,000 plus 5,000, which will be 1,99,000 total I got, right? Total I got 1,99,000, friends. So now the same realization loss, let me consider here deficit 1,99,000, which is also cause for deficit. Even there is no factor which cause for surplus in this problem. Now you can check here the total 77,925 plus 60,575 plus 5,000 plus 1,99,000. I got 3,42,500. So in statement of affairs, how much I got? 3,42,500. You can check here the total how much you will get here, 3,42,500. The same amount we got earlier at the time of checking our statement of affairs, which is 3,42,500. I told you na the list H figure should need to be matched with this. Just we are trying to explaining how this 3,42,500 we got. How this 3,42,500 we got 3 years back. We have reserves and surplus loss 77,925. After that 3 years continuous losses with this 60,575 loss, 5,000 additionally paid our death or disablement compensation. At the time of realization, we got loss for 1,99,000. So like that, shareholders get the deficit of 3,42,500. Like that, he is going to explain through. He means board of directors are going to explain in the statement of deficiency as per list H, guys. So right. Like this, we should need to present both list H statement of deficiency as well as liquidator final statement. Guys, with this, we officially completed the chapter liquidation of companies. I'm not giving much importance to statement of affairs and list H deficiency, but I spent very good time on the remaining topics like liquidator final statement, list B contributories, and distribution of cash among different types of shareholders, and section 326, section 327. Okay, and initial theoretical aspects also, we spent very good time. In fact, statement of affairs and statement of deficiency also I explained with the help of my PDF. Okay, and last information from my side, guys, if you are facing any problems or any issues, or if you are really having any doubts, this is not the end. Still, you can reach out to me, okay, through this mail ID casatyaraju2016@gmail.com. So pass on your questions here, your doubts here. So just you can expect the answers within 2 to 3 days. So don't expect at the same time. Okay, I may not check all the mails on a simultaneous basis. Let me give some time space. Within 2 to 3 days, I will definitely provide a reply. Okay. And as I promised you, I will also upload my personal accounting standards notes. It will be highly useful. Just give some time to me within like 3 to 4 days, even though it is not my cup of tea, just as an additional resource, just I will provide. It will be highly helpful to recollect all the things at a single point of time. So I hope you enjoyed all my sessions from amalgamation till the end of liquidation of companies. So just I pray the God, hope you will successfully clear your exams with flying colors. All the best, guys. So still don't be hesitate if at any point of time, if you are having any doubt. Okay. Bye-bye, guys. Have a nice day. Signing off.